Hello, traders. Hey, I wanted to take a look at a calendar trade here. Calendars can be extremely difficult, extremely quirky to trade because they're so difficult to model. So what I did in this particular trade, Netflix had earnings last night. Going into earnings, anytime you're going into earnings or any sort of big, what we'll call binary event, volatility in the front period options, the options that are going to expire soonest, volatility explodes in those options. People are clamoring to buy them for protection or for trading purposes, and they bid their prices up significantly. So if we look at this yesterday, Netflix had been trading right around $325. So let's take a look at their chart here. So Netflix was trading at the open yesterday right in this 325 range or so. Excuse me, right here's the open. So I went out and I put a calendar on where I sold a 325 put, and then I bought a further dated out 325 put. So basically that's the concept behind a calendar is we are selling the high volatility short period or front period option because again it's inflated dramatically, and then buying the further dated one to protect us or balance that out. Now that gives us, if we look at our Analyze tab, that gives us something that looks like this. On the surface, this looks really, really cool. So now I entered this on January 19th. Earnings were last night. This thing expires today. So this option that expires today, I paid $17, or excuse me, I sold it for $17.82. But then I bought an option quite a ways out, almost 2 months out, that is the same strike for $27.32. The premise on this is that this is going to have to drop to zero today if the price is above 325, meaning that I will be able to basically keep that $1,782 for this option. However, this one is going to decrease during the course of the day today a little bit as well. The theory is that because it's much, much further out in time, it's not going to decrease as fast. This option, the volatility on this was 716% volatility, where this one's only 69%. So again, the theory is the volatility is going to drop significantly more out of this one. So let's look right now, just before the open here. Look how wide our tent is. 266 all the way up to 416 as our break-even strikes. Now, this is where a calendar is misleading. As soon as our market opens this morning, you're going to see this entire tent shrink down. Oh, there's the opening bell. Now, usually it takes a minute or two for the market to open or for the market maker to open this particular post and start taking bids for these options. Oh, there we went. So our tent went from those hugely wide numbers down to this narrow spot. So this position is nicely profitable right now. So I'm going to go ahead and pull this off for, again, roughly a $560 profit, something along those lines. I believe I have an order out there already, so let's just take a look. Yep, I'm just going to go ahead and change that, cancel replace order, and I always put in a higher number than I'm expecting to get, just in case. You never know. So we'll go ahead and we'll just close this out for $14.75, see if we can get filled there. And come back to our Analyze tab. And there we go. We just, oh, no, let's see. Why did we go to stars there? That's weird. So let's come back to Netflix. And yeah, our tent's a different shape now. Again, it still has the same thing. It's just that it was widened out there for some reason. So let's see if we are filled on that yet. Not. Oh, it didn't change my order. So let me pause this, go change my order, and then we'll look at the close trade. Okay, I'm back. So I actually manage my trades using the Option Trader's Assistant. So here is this particular Netflix trade, and I'll go ahead and open that up. You can see we're up about $550 or so in that trade. And I already have an order out there that I'm going to want to adjust a little bit. So we'll get this open and go to my orders. And this is my working order. I've got that out there for $20. And I just want to replace that. And I'm going to come down to, I'll just go to 15. That's a nice profit on this. Then we'll close it out. Yeah, maybe I can get a little more. There, we'll try 15.10. And there we go. We are filled. So let's take a look at this. And these are the results of our trade. $557 in profit, 58% gain. So that is the process on a calendar. And the key takeaway here, the thing I wanted everyone to particularly be aware of, is how that tent changes and shifts to where you don't necessarily get what you think you're going to get. In other words, let me just walk through this trade here real quickly for you. So we can't really see it because it's such a wide tent here, but this is a snapshot of this trade when I put it on yesterday. And then this is the actual trade being on, and then this is what it looked like this morning at the open. And then, of course, we just closed it out there at approximately that $550 profit. So that's it on this calendar trade, earnings trade for Netflix.